Are you looking to reduce your tax bill in retirement? You're not alone. Many retirees struggle with how to use tax credits and deductions to lower their tax burden once they stop working, but it's not as complicated as it seems. By using the right strategies, you can save a significant amount of money, which can make a huge difference in how far your retirement savings go. In this video, I'll show you exactly how to use tax credits and deductions to lower your retirement tax bill. Stick around because I'll also share why thousands of Americans are protecting their wealth with gold IRAs, and how you can too if you're serious about safeguarding your savings. The first thing to consider is tax credits. These can directly reduce the amount of tax you owe, and there are several that can be incredibly useful for retirees. One of the most overlooked credits is the credit for the elderly or disabled. If you're 65 or older or retired due to disability, this credit can put money back in your pocket. It's not available to everyone, but if you qualify, it could reduce your tax bill significantly. This one is worth investigating further if you think you might be eligible. Next up, we have tax deductions, which are a little different. Deductions reduce the amount of income that's subject to tax. If you're over 65, you're eligible for an increased standard deduction, which means you can lower your taxable income without itemizing other deductions. This is a huge win for retirees who might not have complex expenses to itemize, making it a straightforward way to reduce your tax burden. Another powerful deduction is medical expenses. Once you're retired, medical costs can eat up a large portion of your savings, but the IRS allows you to deduct medical expenses that exceed 7.5% of your adjusted gross income. This includes everything from doctor's visits to prescriptions, so if you've had any significant health expenses, it's worth tracking them to see if you can claim them. Now let's talk about retirement account withdrawals. A lot of retirees don't realize that pulling money from certain accounts like your IRA or 401k can lead to substantial tax savings if done strategically. One way to minimize the tax hit is by withdrawing from accounts that are taxed less, such as Roth IRAs. If you have a traditional IRA, on the other hand, the withdrawals will be taxed as ordinary income. A strategy many retirees use is to start pulling from taxable accounts first to allow their tax-deferred accounts to grow longer, lowering their taxable income in the long term. Speaking of tax-advantaged accounts, have you considered a gold IRA? As you look to lower your retirement tax bill, diversifying your assets with something that can offer stability, like a gold IRA, could be a smart move. Gold is often used as a hedge against inflation and market volatility, so while you're saving on taxes, you could also protect your wealth from economic shifts. If you're serious about protecting your wealth in the next 2 weeks, click the first link in the description to get a free gold IRA guide and see why thousands of Americans are turning to this strategy. Moving on, if you're still working but nearing retirement, contributing to your retirement accounts can also lower your tax bill. By contributing to a 401k or IRA before you retire, you can lower your taxable income in the year you make the contribution. These contributions also grow tax deferred, which means you won't pay taxes on the money until you withdraw it, potentially many years down the line. This can be a solid move if you're looking to get your tax bill under control as you near retirement. Lastly, don't forget to consider state taxes. Some states are much more tax-friendly for retirees than others. For example, states like Florida, Texas, and Nevada don't have a state income tax, so if you're looking to lower your overall tax burden in retirement, it might be worth considering a move to one of these states. Remember, it's not just about avoiding taxes, it's about finding ways to keep more of your hard-earned money. If you're a retiree with $100K or more in your IRA, 401k, or even $5 in savings, this is the perfect time to start thinking about tax strategies that will work for you. And if you want to learn more about how a gold IRA can help protect your wealth, again, don't forget to check the first link in the description for your free guide. Gold IRAs can provide you with tax advantages while helping your retirement savings grow in a way traditional accounts might not. This is an opportunity you don't want to miss. So, to recap, tax credits, deductions, and smart retirement account strategies can make a huge difference in your retirement tax bill. If you're serious about protecting your wealth and getting ahead of your taxes, now is the time to act. Click that link, grab your free guide, and start planning for a more secure retirement today.